Welcome back, guys, to the channel. And today I'll be working on the Euro USD chart, and this is the monthly chart for the pair. I've done some markups, and I'll briefly explain them here. So there is this inefficiency. So inefficiencies below price, they act, they act like support, like they support price up. In the inefficiencies above price, they act like resistance, so they'll push price lower. So the logic here is that I'll be expecting from this point that price will now start trading higher up until it gets into this inefficiency, and then trade lower and lower, maybe then reach for the sell liquidity below this old low. So that's where people place their stop losses when they bought this move here, and if they're still holding their positions, that is. So that's it about inefficiencies there. In the buy sell liquidity, there is where people have their stop losses when they are selling this move here. So if they are holding their positions and they haven't taken any purchase or profits, that's like liquidity which is floating above this high here. So buy sell liquidity, sell liquidity. And for this low here, you see that price has already traded lower and lower. So for those people who are holding positions and they have their stop losses here, the stop losses have been triggered already, and that is those people who were like selling this move have absorbed the liquidity below this low here. In the For those that would like to buy based on the logic of inefficiencies, this would be the right time to follow up on some bullishness that may get us to this inefficiency there. However, I don't just work with the logic of inefficiencies. I let my trading model lead me into the proper decisions of whether I should trust these inefficiencies there. So this is just the basic understanding for the inefficiencies, but the trading model is the one which will point whether I should uh, work with the logic behind the inefficiencies that I have here. So in terms of my trading model, you see that once price is trading, I started to trade lower and lower. There is some sort of break of market structure. So that will just signify that we are now entering into a bearish curve. So we're going to see a lot of things clear in the lower time frames, but a better explanation is going to be done here on the monthly chart with these candles here, which have the information well consolidated there. So once price trades significantly below the previous candle here, that would signify like some sort of break of market structure here. So as it trades lower and lower, you see that it made a low here. Once this low was made, the next candle here uh, traded a little bit higher into the range before continuing to the downside there. So from this point here, it's like this here. So that's like a low, goes back into the range, and then sells off. So once this sort of here, and they reached into this inefficiency there was some sort of reaction. That reaction caused price to trade a little bit high, like caused the retracement. So the retracement is from this point here to that point there. So this is more like the structure that we have. So we have this low, price trades back into the range, and the like we are floating like this. So for me here, I mark this as level one because it gives me an opportunity to sell the move from this point to another point, like say into this inefficiency there. So for me here, I'll sell from this point into this inefficiency, working with the logic of inefficiencies there. So I make this is level one, and the next opportunity comes with level two. So there is a low here, price returns back into the range. So I'll be hunting for sell setups. Once I get that sell setup, I'll be selling it probably to this old low here. Now this is where you see that my logic when it comes to this inefficiency here has been broken, because this is what my model tells me. So there is level one and there is level two. About this level two here, I expect some sort of consolidation. Like I'd love to see price range a little bit before it continues to the downside. And this works well with the logic about these inefficiencies here, where it holds some sort of liquidity in the that kind of consolidation here. Yeah, so that kind of consolidation there is the one which you tell me that there is liquidity which is being absorbed in this range, and once that is done, where we are going to see price trade lower and lower and reach for this old low here. So currently, in the based on what I have here, the bias is that I'm very bearish on this pair here. So what I'll be expecting here is to see some sort of a follow-up move a little bit, like more like a Judas swing, and then see price trade lower here. And this move here is going to be some explosive move, going to be a fast move based on my experience. So I should be expecting price to trade to range more in the probably give me some sort of price action that will look similar to what I have here. So let's switch to the weekly chart and see what we have. So as you can see, there was a break of market structure here. So with a breakout of market structure, you expect what? A retracement. So this is where the retracement happened. A low was formed, price traded a little bit into the range. Once it did that, it gave you an opportunity to sell here, and it traded lower and lower. As it traded lower, there was also another break of market structure here. You see that another low was broken. So if a low is broken, at least you should also try to seek for a retracement there. So once this low was formed here, there was that retracement there, which leads into this inefficiency there. And this inefficiency here has supported price lower, in but it hasn't significantly pushed price below this low here. So it's more like we are ranging from this point, to that point. We haven't made any significant move. So it's more like we are ranging, but it'll be trading lower and lower. So we have this kind of price action already here. So we have this low here, goes higher, trades lower. So what I would be expecting to see is that fake move, probably maybe reach above the previous week's high or the previous Friday's high, and then continue to the downside there. Or else we might see price take the buy side liquidity there and then trade lower and lower. So it will be up to the market structure that might have intraday there. So currently we are at level 2 in the I'm expecting this explosive move to the downside there. So I'll let the market structure in the lower time frame tell me what I should be expecting so far. So I'm going to just make the levels like that. And now my area of focus comes to this range here. So that's level 2 in the I should be looking for sell setups. So I'm going to switch to the daily chart and see how price action is presenting itself as I hand for the sell setups. Okay, inefficiencies will support price lower. I have this inefficiency here. And indeed, once price got into this, we can see that the next candle here, which is the candle of today, is already bearish there. In the depending on the model there, you see that I have this is my level 1 there, and this will be my level 2 there. So I'll be expecting to see price move lower explosively, reaching into that inefficiency or that odd low there. So let me just zoom out a little bit. So be expecting price to reach into this range here or sweep the low here. So this will be the take profit. Now for the stop loss, it will be here. But I have to switch to the lower time frame in order to reduce the points for the stop loss there. So that's level 1 and this is level 2. Now we should be expecting to see price trade lower and lower. So this is the forward chart. For the forward chart, you see that there is also an inefficiency here in the. I would be expecting to see it support price lower and lower based on bias that have the bias that I have, that is bearish there, based on the monthly chart, the weekly, and the daily chart. So I'm very bearish. So anything that supports my view, I will take it wholeheartedly there. So for this inefficiency that is on the daily chart, I have another that is within it on the 4 hour chart. And so this works well with the daily chart inefficiency there. So my stop loss would be here then, because this would be like the break of market structure from this point, makes a low, trades back into the range, and reaches for the inefficiency, which is expected to support price lower. So this is my level one, and I'll be expecting price to trade lower and lower. So I'm going to connect to my paper trading account and sell from that point. So that's the sell. Yeah, just so the stop loss is going to be here, and the take profit is going to be here. And I will be waiting to see if this might hold. So that's level one. The break of microstructure happened here, level one. In the I should be expecting to see price trade lower and lower. Yeah, so market structure on the lower time frame is also supporting the very same thing. Break of market structure level one, level two reaches a little bit into this inefficiency, now starts trading lower. So I'm just gonna leave this here, and hopefully I might follow it tomorrow and see how far we may have got with this idea. So thanks for your time, and thanks for being with me to the end of this video.